Hey everyone, Dennis here. Today we're going to be looking at my portfolio and talking about three different stocks in this portfolio that are really great long-term stocks that I think can work well for a lot of dividend investors. Obviously, that doesn't mean it's going to work for every single person, but I'm going to kind of break them down and kind of go over why I really like them, how they've performed in my portfolio, and kind of just going over some of those different things with them. So, if you haven't been following along, make sure you guys hit that subscribe button down below. Right now, this current portfolio is sitting at 18,168. You can kind of see over here, if I go back to the day, we had a positive day, $26 in gains. The week has been good, plus 66. The month has been pretty solid as well. Over $900 in gains. And then if we look at the quarter, we're up almost $1,900 in gains. So we're doing pretty well here on this portfolio. Of course, we do care mostly about not just dividends, but also growth as well. We're kind of in the mix between dividends and growth. We like growth dividends, kind of like our little thing going on here and what we're trying to build. So let's kind of go ahead and break a little bit more of this down. And for anybody that's been kind of like looking at this and saying, wow, 18,000 is way more than I can even fathom. Well, keep this in mind here. So a year ago on this portfolio, I was sitting at just barely over $1,000 in this account. So just over 1,000. And if we go all the way back to my all-time, I'm about to hit 2 years here, but we were sitting on January 24th of 2019 at $100 deposit in this account. So it took time to build up and get to this point, so it's not instantaneous. So I do encourage anybody that is looking at this and saying that doesn't seem feasible to me. It is. As long as you stay consistent and stay focused on the goals, you get more comfortable with how you invest, and then you can start getting gains like this. Well, we have over $3,000 that have been gained so far on this portfolio. And any of those people that are curious about the unrealized gains, we're sitting at about $2,400 in unrealized gains, which is about 15% of this portfolio. So not too shabby. Obviously, something we always want to keep focusing in on. Like I said, dividends as well as growth are the things that we care about here on this portfolio. Now, when we talk about this stuff, of course, we are always making sure that we pay attention to our dividend yield. So if I go and actually, sorry, let me go to trackyourdividends.com. So this is a website I use to kind of track some of my dividend information that I have. So you can see my current yield on my portfolio is 1.96%. And then if you actually look over here to the side right next to it, this is the yield on cost right over here. This is 2.27%. So most dividend investors, if they see that this percentage right here, the yield, being less than 2%, or being under 2%, it'd probably get laughed at. But I personally don't care about this number as much as I care about this number right here. The yield on cost is, to me, what is more important in the process and what I'm trying to accomplish, because I'm not caring about getting the dividends today. My goal is, when am I going to get this money and actually utilize it? Is in maybe like 15 years, maybe 20 years. So about 15 years plus is what I would say. So the reason that's important to note is, since I'm going to take those dividends that get paid out from, something like Apple, I'm getting estimated about $12.47 this next year in annual income. Well, that money is going to go right back into either buying Apple or any other stocks in my portfolio, because I don't need that money right now. I want this for 15 plus years later. So that's why the yield on cost is going to be the thing that I care about, because right now, if you look at it from a standpoint that I'm getting right under 2% on my money in dividend income, but because companies increase their dividend yields all the time, this is what I care about. This dividend yield right here, the yield on cost. So I'm actually getting technically 2.27% on my money because dividends increase over time. And we're going to definitely talk about that here as well too, because that is very relevant to how this conversation kind of comes about. Now, before we go on to that part of it, I just want to let you guys know too, if you guys want to support the channel to continue to get free content just like this, check out my friends at Earnest. I'm going to have a link for them in the show notes down below. They help you with refinancing your student loans. It takes about 2 minutes to figure out if you can lower the percentage of your actual rates, and hopefully that money can, put aside to reinvest more or do whatever else you want with it. But that link down below helps out the channel, but also gets you a nice little bonus. So What we're going to do now is hop over to seekingalpha.com. So I have my portfolio kind of set up here so you can kind of see it all at once. And what we're going to do is talk about these 3 different companies that I feel are great, strong companies to have in your portfolio. And the first one is going to be Home Depot. So I've talked about them before in the past. I love Home Depot. I think they are a fantastic stock to have. We're going to go over some of their data points here. Let me see if I can zoom in just a tiny bit more. All right, so let me see here. Just get the HD right in there. So what I want to kind of show you guys here too is why I like them as a dividend stock. Now, there's a lot of different stats you want to be going over. And the cool thing with Seeking Alpha is they have, the financials that you can go over if you wanted to. You can look at growth. You can look at profitability. You can look at a lot of things. You can look at the earnings, all these different things that can really help you make determinations for a stock. And I encourage you to do so. But what I want to just kind of go over today is mainly their dividends and kind of focus on that. Before we do though, their PE ratio, because it's not going to be on the next page, is right here at 22.48. So that is a pretty solid PE ratio that we are looking for. So if we now head over to our dividend scorecard, as they call it here, we're going to get some pieces of information. First and foremost, obviously at the time of this recording, they are trading for $264.81. Something to keep in mind, if you do fractional shares, that really doesn't matter anymore because all these other stats are going to be more important than the cost. Now, if you have a brokerage that doesn't do fractional shares, paying $264 per share can be really mind-boggling. So if you need a fractional share brokerage, check out M1 Finance, which is what I have right over here. This is literally what I'm actually using all the time. I'll have a link for them also in the show notes that does support out the channel too. But then you can go ahead and get fractional shares, which looks something like this. I'm going to go into my holdings. So you're going to be able to see here companies like Apple, I have 15.20 shares. Companies like Microsoft, I have 7.88 shares. These are fractional pieces, so they're not the whole thing, which is really, really powerful tool to have when it comes to trying to build up a portfolio. But going back to this, so now that we know that this number is not really relevant to what we need to know down here, because obviously they are going to be correlated, but when it comes to the entry price, I'm not worried as long as these numbers down here make sense. So as long as all this stuff over here makes sense, this price is irrelevant to me personally, especially because it's also skewed a little bit too. Sometimes you'll see companies that have like much higher stock prices than other companies that you would think have higher ones, but they're lower. Well, you just don't know if those companies did stock splits or had other things going on, or like their market cap, because that'll make a big difference too. And so I don't look at those stock price anymore as a big factor. So these are the things that I do look for, and this is why I like Home Depot. So if we look at their dividend yield is 2.26%. So this is actually very close to what my yield on cost is as of right now. But remember, I don't care what the current dividend is entirely. Obviously, it does have some factor into it, but not all of it. So 2.26% is a really solid dividend yield for me. Now, because they pay out on a quarterly basis and their annual payout right now is $6 per share, which is pretty awesome. That means every quarter you're getting $1.50. Now, of course, this is really important to note that the way that the dividend yield and the price are pretty much on opposite ends. So when the price goes up, the yield goes down, and then when the price goes down, the yield goes up. So that really does play a factor in that regard. But again, if I buy fractional pieces into Home Depot today, like let's say I put in $132, exactly half of this. Well, effectively, I'm going to get half of this dividend right over here, so that would be 75 cents. That's why the price point doesn't matter. As long as these numbers make sense, then we can continue to move forward. So you can see right here, they have a payout ratio of 50.78%. Now, what this really means for anybody that might not know what this is essentially how much of their profit they're sending out, how much of their gross they're sending out. How much of their profits they are paying out in dividends. Usually for the companies, you don't want them to be anywhere more than 60 to 70% of the payout ratio, because anything beyond that is just going to be too much to bear as far as being able to reinvest. Now, companies do it where they are well over this. A lot of times, if it is like a REIT, you'll see these pretty high, but even regular companies sometimes go well above the 60 to 70% kind of threshold that most people look at. And that's not good. That usually means that they're getting closer and closer to paying more out than they actually brought in. And if you see this number right over here, this payout ratio, anything above 100%, that means that they have to get debt in order to pay those dividends. So it's not sustainable long term. So that's why we're looking for something underneath that 60 to 70%. And being at 50%, that is looking pretty good. Now, the other thing that we want to pay attention to is their dividend growth. So this is at 11%, 11%. This is at 11 years, which means for 11 straight years, they have been increasing their dividend yield, which is the thing that I love the most. Like, I am a big fan of this stuff right here. Dividend growth is important. And I think this is what helps get to a point where in 15 years, I'll be able to do the things I want to do. And I'll show you guys some numbers here too. But this right here, this is a really cool number here. So you'll see the 5-year growth rate at 23.68%. So what does this mean? Because that's obviously a really high number. Is that good? Is that bad? This is fantastic. This is amazing when it comes to dividend growth. What this effectively means is that you are going to be getting more money on your money for dividends for doing almost absolutely nothing for the most part. And what I'm going to do is I'm going to go into where they say dividend news right over here to kind of give you a better breakdown of how this actually works. So pretty much every quarter, because Home Depot pays out quarterly, like we talked about, every quarter they'll announce their declared dividend. Now, most companies will do it for pretty much a whole year of paying the same amount. So you'll see here, Home Depot paid out $1.50, or announced, I should say, that they're paying out $1.50 per share for the month of December is when it's coming out. But if we kind of scroll back, August did the same thing, declared $1.50 dividend. So if we scroll back, they declared $1.50 dividend. So these are all the same thing because they are paying out same thing month after month. So then you can see right over here, this one says also declares $1.50 in dividends from Home Depot. But what you'll actually see over here is that they actually had to declare of an increase. So right over here, they were originally paying $1.36 per share, but they bumped that up to $1.50, which is a 10% increase, lower than their average. But this right over here is an increase. And this is why I love companies like this. So back in February of this last year, they increased by 10%. That's 14 cents. Not a lot of money, right? So, if we look at 14 cents, that's not a ton of money. But when you own multiple shares of this company, this is going to have a huge impact. This right here, this 14 cents per quarter is more money than you were expecting because you were expecting to get that $1.36. So if they keep increasing it year over year, then what's going to happen is your money is going to be getting paid out more for you, which means it makes it more valuable, which is how you see this yield on cost right over here. This yield on cost is because companies are increasing their dividends. So if we kind of scroll back months and years ago, you can see here back in November of 2016, as an example, Home Depot was paying out 69 cents a dividend. So here's the funny thing is that forward dividend yield, so at that time, if you bought into them, was worth 2.14%. So you were getting 2.41% on your money. So a lot of dividend investors that go for that, solid 4% or even 3.5% would look at this Home Depot stock and say, nah, this Home Depot stock is not worth it because 2.14% is not going to be worth it on my money. But think about this. Getting paid 69 cents in 2016 and then scroll up all the way to 2020, so just a couple of years, and you're now getting $1.50 per share. So that is the yield on cost. So what we're going to actually do is click on yield on cost right over here on this page, and we're going to jump back. So this kind of works backwards. So this is most current here on the left, and then it goes backwards back in time. So this is 5 years ago on this side of the screen. So what we're going to do is take a quick look. So you can see here, so if you bought Home Depot stock today, you'd get a dividend yield of 2.27% at a cost per share at $264. If we go back in time and you bought this stock, let's say around 5 years, not exactly 5 years, but right here, if February 9th, 2016, the cost per share was $113.86. Granted, the yield at that point was probably around that 2% that we saw, But look at that yield on cost, 5.27%. How is that possible? Why is it so high in comparison to where the stock actually was back in 2016? Well, the reason for it is if you bought the stock, and let's say you bought one share, as an easy example, one share of this stock at that time, and you didn't buy any more of it, and over the years, as you kept going, dividend increase. You kept going, dividend increase. Kept going, dividend increase. Kept going, and dividend increase, and so on and so forth. So you bought over here at 2.16% or whatever it was back in 2016, but now it's worth around 5%, give or take. I think it was 5%, right? Let me double check. 5.2, 5 point something. So you would be going from 2.16% to 5%. And that's not even including the actual growth of the stock itself. I mean, you obviously saw what the price is now and versus where the price was back then. That's a pretty good increase as well, too, when it comes to the stock price. So you're getting good growth and you're getting good dividend increases, which then yields you good dividend actual payouts because now you're getting more money on your money. Now, granted, most people wouldn't just buy one stock or one time and then not buy all these next couple years. So you'll probably be buying, here, buying here, maybe buying at this time and this time. So you'll be buying a couple times as well too. So that'll kind of like skew this number down a little bit. Maybe it'll be 3.5. Maybe it'll be like 3.8 because depending on when you're buying more shares of the company. So you're buying it more and more, which then I kind of just noticed that it's kind of cutting off the screen there. So let me clean that up. So if you're buying over here, while you've 5 years ago bought over here, that's okay because obviously in another 5 years, if things continue to progress forward, that'll just continue to increase up that way. Now, for me, that's why I see Home Depot as a very solid stock. That's why I see them as a great opportunity. If we go to right over here at Track Your Dividends, the premium version does show you the safety scores right over here. And if you're curious about them, I'll have them in a link down below too. You guys can check them out. So they have what they call a dividend safety score. So you can see right over here, dividend safety. And right over here, you can see that Home Depot actually has a dividend safety score of 78. Obviously, that doesn't mean it's a guarantee, and things can always change over time. But that's a pretty high dividend safety score, meaning that their dividend is going to be pretty solid across the board over a long period of time. So I'm fairly confident that me putting more money in today will help me yield those high results. Now, we talked about how their 5-year average was 23%, but the last year was very, very low. It was about 10% in comparison. 10% is not low by itself, but when you compare it to its average, obviously it's not. But we had to consider that February of 2020, we had a lot of things going on in the market, so that had a huge impact. But let's look 1 year prior in February of 2019, had a 32% increase. That's huge. That's a lot of percentage increase. That's a lot of extra dividends in your pocket. That's more money for you for doing absolutely nothing. To me, that is a raise, and the best kind of raise, because you didn't have to do anything to earn this except for holding onto the company and thinking long-term with your investing. So that to me is why Home Depot is one of the stocks. Now, I know I went really deep into Home Depot, but it was mainly to kind of break down the stocks themselves. All right, so I actually had to quickly reset my router here, but now we're going to go ahead and hop back over to our M1 Finance account just so you can see that I have in my portfolio Home Depot right over here. Obviously, I don't have the most in the world. I have about $676 as current value with about 2.5 shares of the company. Now, I'm buying in fractional shares, so that's why they're smaller amounts, but I am constantly investing more and more into them as I see fit. Currently, as of this recording at least, I've actually been investing quite a bit more into them. So if I actually break this down to HD, just so you guys can see here. So these are stocks that I've been buying from Home Depot just in the last couple of weeks. You can see 55, 10, 25, 20, 20. So you can see a bunch of different times purchasing into this. A lot of this has to do with how it is currently just not doing as well in the market. So anytime it's down in the market for any stocks I own and I believe in long term, I tend to buy more of at that time. So The next one on this list, like I said, we're not going to go into great detail with the rest of them just because we kind of broke down the most important parts of these. But of course, this is going to be with ADP right over here, current stock price at 172 even. So if we go into their dividends over here, you're going to see, so they have the yield of 2.14%, fairly close to the other one. You can see here their payout ratio is 66.42, so kind of on the high end over here from what we like, but we keep an eye on things, and that's why it's important to do so. Their current payout for the year is 372, with every quarter being 93 cents. Their dividend increase has been for 22 years, and their 5-year average has been 13%. So that's a big reason why I care about this company and being invested with them long term. Their most recent one back in November has been much lower than their average at 2.2%. For the year of 2020, I have been a little bit more, at ease with companies not having as big of an increase as their averages, taking into consideration all things, considered. But hopefully next year we see a much better increase. So you can see in November of the year prior, 15% increase. So that's a huge increase, and that's what I'm hoping that it goes back to, so that way hopefully those dividends can keep growing and having a higher dividend yield like we talked about before. So if we look at my portfolio, if I go to industries and energy here, right over here, I'll have this load up here for us. We have ADP right over here. Current value for this is $475, and that is about 2.76 shares. Oops, can't get that pen. 2.76 shares in total. You can see over here my average price is 143. Current price point is that 172. So I haven't been buying as much currently into them just because the market has been going up for them. And like you saw earlier, putting more into Home Depot. But I'm still buying in smaller doses here with this company, just not as much as I am with Home Depot. All right, so if we go back over to seekingalpha.com, we can go grab our last one over here for you guys to take a look at, and this one's a pretty good one too, and that is going to be Discover Financials. So this one right over here, let me go ahead and click on the dividends tab. So this one right over here, current price point is $84.16. Dividend yield is 2.12% with an annual payout of $1.76. So every quarter is about 44 cents. Payout ratio is looking pretty good, right under 60%, just where we like it. 10 years of growth, which is great, and then about 12.8% in dividend growth. Now, because they are a bank, they had some different things as far as what they can and couldn't do when it comes to dividend increases and some buyback stuff as well too. But when we consider, if we go back in time here, previous updates right here, you can see 10% back in July of 2019, which is a pretty great increase. And then the year before that, which was also in July, you could see a 14% increase in their dividend yields. So you can see that they are increasing their dividend yields to a really strong amount. So that way, you're getting paid out more for doing absolutely nothing extra. And I think having them in this portfolio for myself is great. You can see over here, so current value is $606. Total amount of shares is 7.21. Now this one I got for an amazing deal because if you see, I bought the shares at $40.57, and their current price point, as you can see here, is $84. So I have almost $324 in gains right now on this account. Deciding if I want to keep on holding onto this for long term, or if I want to collect on some of those gains as well too. But either way, I think personally for me, since I am long on Discover, I won't be doing that. I'll be keeping them for that dividend growth because I believe that once everything kind of situates a little bit more, we're going to see that dividend increase come back again and have it continue to grow and grow even further. Like I said, those dividend stocks work for my portfolio because obviously I'm pretty diversified across the board with different sectors and the different companies that I have in them. So always consider and do your own research when it comes to figuring out, are these companies going to be good for me? Is Home Depot going to be a solid purchase for me? Is ADP going to be good to add to my portfolio? Or is Discover Financial Services going to be something that I want to add as well? So those are all things you got to make sure you decide on because it is going to be different for every type of investor. These have around 2% dividend yield across the board between all of these. So for some dividend investors, especially if you need the money now, might not be worth it for you because this is a quote unquote lower yield, but you saw that the growth rate is much, much higher, equaling out in the next couple of years to be 5, 6, even potentially 7% yield on cost, because I am buying in now and then having them increase those dividends over the next couple of years. So if you want to keep on watching more when it comes to learning on this channel, check out this video right over here so you can keep diving deeper into my portfolio and my investing style to keep on learning. My name is Dennis, and I'll see you guys in the next video.